into the superintendent's report.
We have our external auditor, Jeff Bliss. He is from the firm of Birch, Lindsay and Stevens, LLP. With that, Mr. Bliss, if I put the line.
This mic.
Probably the one with the podium with you guys.
Dr. Carlisle, good evening, board members. It's a pleasure to be here to report on the annual audit for the year ended June 30, 2013. Some of the highlights of the audit on the financial aspect, the district made a significant improvement in its financial position over last year. Last year, I know there were some concerns. Last year was the first year in a 5-year period that the district actually had a decrease in its fund balance. This year, or the June 30, 2013 year, the district had remarkable improvement in its fund balance, marked in some of the highlights there by additional revenues brought in of over $800,000 over what we budgeted, as well as a significant reduction in expenses of about $2.2 million from the previous school year. And has positioned itself in a much better place than where you were last year, especially going into your 14-15 budget process. Some of the more specific things of fund balance, you ended the year and you had approximately $2.2 million in your capital reserve. Those are monies that are put aside specifically for capital project expenditures that are in your long-range facility plan. Those funds cannot be used for operating expenses such as salaries or health benefits or tuition costs, but are earmarked and can only be used for capital projects that the district will undertake in the future. The district also had a reserve for maintenance costs or maintenance projects of approximately $1 million. And again, those are funds put aside strictly for maintenance projects. Those are projects that are not capital in nature, but are to keep the facilities in their current working order, such as reglazing of windows, replacing soffits, replacing cracked sidewalks. And those funds, again, are earmarked for maintenance projects and, again, cannot be used for operating costs. The district also had an emergency reserve of approximately $600,000, represents approximately 1% of your budget. It's a reserve that's allowed by the state of New Jersey in case of a situation during the year that there's an unbudgeted cost resulting from an emergency. Those funds require the county superintendent's approval to use them, and it will only pretty much permit you to use them only as a last resort. The district also had tuition adjustment reserves from the 11-12 school year of $320,000, which it put aside to basically protect the district from any additional tuition bills that come in later on in the year due to certified tuition adjustments. In the state of New Jersey, public schools get their tuition rates certified after their orders are submitted. And if those certified tuition rates are higher than the actual rates they charge, they're permitted to bill the district's additional costs. So the states allow the districts to put aside funds to protect them against those additional costs. So for the 11-12 year, we had $320,000 of tuition reserves, which the district is required to utilize in its 13-14 budget as a revenue source to cover those bills. And those funds have been utilized in the 13-14 budget and are no longer available for future use. At the end of June 30th, 2013, the district created a tuition reserve for the 12-13 tuition adjustments. That amount was $310,000. Again, it's put aside to protect the district from those additional tuition bills that will come in 2 years from June 30, 2013. And those funds must be used as a revenue source in the 14-15 budget. The district also had surpluses that it was required to use in the 13-14 budget of approximately $2,393,000, and it represented the amount of fund balance from June 30th, 2012 that was over the 2% maximum amount. That $2,393,000 was put in the 13-14 budget as a revenue source to finance the expenses of that year. And again, those funds have been utilized and therefore are no longer available for future use. The district also has a reserve for funds that at the end of the year that were over the 2% as of June 30, 2013. Those funds of approximately $4,800,000 are reserved and restricted for use in its 14-15 budget. Again, the district must utilize those funds in its 14-15 budget to finance expenses in those budgets. It cannot use those funds in the current year. They are restricted and earmarked specifically for use in the 14-15 budget. The district had some committed fund balances of $260,674, and those were basically open purchase orders for construction contracts where the board awarded those contracts, but those contracts were not performed on. And those monies are committed in fund balance. They get rolled into the 13-14 budget and get expensed in the 13-14 budget as those services are rendered by those contractors. As of today, most of those, if not all of those, contracts have been performed on and those monies liquidated, and therefore those monies are no longer available. In addition to committed fund balances, the district has assigned fund balances of a little over $953,000, which represents open purchase orders of an operating nature. Those are goods and services for day-to-day type operating costs that the district entered into at the end of the year. And again, those purchase orders get rolled into the 13-14 year and 13-14 budget. And as those goods are received and those services are rendered, those purchase orders get liquidated. In all reality, most of those purchase orders have probably been liquidated by now, and those funds are no longer available for future use. That leaves the district what is called unassigned fund balance, which is the fund balance that is available to the district to use when it starts to prepare its 14-15 budget. It's $1,141,000 and represents basically 2% of the district's expenditures. It's the maximum amount you're allowed to have, and so at year end, you had the 2% that you were committed to have. So just financially overall, the district, you did make a significant improvement in your financial condition. Obviously, you brought in some additional revenues and made a significant impact on costs and controlled those costs and reduced them over last year by, again, over approximately $2.2 million. In addition to the financial aspects of the audit, we had some findings resulting from our audit, and those will be in the smaller report on the last page. It's a summary. I'll go through them on page 15, and if people are following along on the synopsis. Under financial accounting and reporting, we had 6 recommendations there. The first one dealt with purchase orders at year end, and that we need to do a better job reviewing those purchase orders and classifying them as encumbrances versus payables, as well as if they are overstated, we need to go through them and cancel them so they don't show as being outstanding. Our second recommendation there deals with some old inactive bank accounts that we have in our general operating fund, as well as our trust and agency funds. These are accounts that they have small balances in them, and we're suggesting that rather than keep these accounts open, we consolidate them, close them, and there's no real need, there's no activity in them, and it just kind of makes the accounting a lot easier. It's kind of housekeeping before accounting. Item 3, during the year we noted there was a scholarship account that was established that was not approved by the board, and that there were expenditures made out of there that were not approved by the board, and there were some other control issues with respect to signatures on the checks. All accounts that are maintained under the auspices of the district must be approved by the district. All expenses that come out of those accounts must also be approved by the district. And as a control measure, all district accounts should have at least 2 signatures on the checks. Item 4 deals with the health benefit premium contribution made by employees. Under Chapter 78 of the state of New Jersey, employees now are required to contribute towards their health benefits. And we just noted some differences in the calculations due to certain bills that we were using versus the bills we were actually paying. So there, what we are suggesting is that the district needs to update the payroll records to reflect the bills that are actually being paid when they're doing the calculations of employee benefits. Item 5 relates to unused sick and vacation compensation, and that we need to take a look at some of the contracts and make sure that the calculations that we're performing and the payments we're making are in accordance with the contractual agreements that the board has approved. Item 6 deals with federal grant program reimbursements. In the past, the state of New Jersey, through federal government through the state of New Jersey, used to give us all our grant money up front. It would actually pay us 1/10 a month over the school year. About 2 years ago, that process has changed, and now we are required to file for reimbursement for expenditures we made. During the past school year, we weren't making those filings for reimbursement on a timely basis. We need to improve that process and file in maybe a quarterly basis, but some periodic basis that's timely. Under school purchasing, we had 2 recommendations there, and that just continued efforts to be made to ensure purchases and contracts awarded next to the bid or quote threshold are made in accordance with the local school public contracts law. The state of New Jersey, with respect to purchasing, is very regulated. There's a tremendous amount of rules and regulations. We really need to, keep on our toes and make sure we do the purchasing and the contract awards in accordance with those regulations. Item 2 deals with vendor invoices. The district has quite a few contracts where we contract on what we call a per unit and material basis, either a per unit labor basis or a per unit supply or good basis. In some of those contracts, the vendors are not providing sufficient information on their invoices for us to determine that you're in compliance or they're in compliance with their contract that was awarded to them. So what we're requesting there is really 2 things. One, that the vendors provide invoices that are specifically spelled out in what they're charging us on the per unit rates, as well as the contracts be reviewed to make sure all the per unit rates that they're charging us are in the contracts. The next area of recommendation was the after-school daycare and summer program. It's not a big program, the year to run those after-school programs. However, we do need to improve our internal control procedures and our accounting procedures over that program and get a better and stronger record keeping and stronger procedures over those funds. Last recommendation regards student activity accounts. Student activity accounts are accounts held at the schools pretty much by the principals for the students. They're monies that the students collect. It's monies that the students spend on their clubs and their organizations. And we need to just continue to monitor those and develop and implement a standardized accounting procedures and standardized accounting records for all the accounts maintained in the various schools. They all don't follow the same procedures. Some of them have some good procedures. Some of them have some weak procedures and none at all. So we need to kind of get them all together, give them a standardized set of books, a standardized set of procedures, and all follow the same program. Those are our recommendations. So if there's any questions, we'd be more than happy to answer.